just to go one more last point on that, nothing necessarily would preclude a project from trying to qualify under the scheme once it gets going, but then would be registering as part of an ongoing project, and the question would obviously be where you got your baseline and additionality. In terms of timing, so we've already, back in June, the Waxman-Markey bill was passed by the House. The legislative action now is really, or the ball is in the court of the Senate. And the Senate right now, well, all of Congress is on recess through August. They'll be back right after our Labor Day holiday, which will be September 8th. And at that point, we'll pick up with a goal of bringing a bill to the floor September 28th. It's kind of the target date that has been put out there. The Senate picture is a little interesting. There are a number of committees that have claimed or kind of noted that they have some claims to jurisdiction in the climate portion of the bill, whether that's jurisdiction over the allocation, which is one big area of discussion right now, or offsets or trading, or the broader environmental goals. In terms of Senate passage, at this point, I think there's a lot of, this is the big question, because without a bill coming out of the Senate, we don't get a bill that can go into conference committee and eventually, make it to the president to sign. So I would say at this point, the Senate Environment Public Works Committee is writing the bill. They should hopefully have something done coming out of recess, with then a goal to bring things to the floor at the end of September. And that's the timeline that they said they're sticking to. Whether or not they'll hit that is going to be highly determined by what happens with some of these jurisdictional issues between some of the other committees besides the Environment Public Works Committee that have declared that they would like to have a say, particularly the Senate Finance Committee, which is chaired by Senator Baucus. He's kind of staked a bit of a claim and interest on the allocation side of things. So not as much on the offset side, but on how the actual allowances are being distributed and who they're going to. So I will throw that out there. I'll be curious to see what the poll comes back as in terms of timing from the group. Then once the bill is passed, whether that's this year or next year or at ever such time as a bill actually makes it through and is passed and signed into law, there will likely be a couple years of rulemaking. So the bill will lay out the legislative framework at that point and also lay out who the administrator of the program will be. And then once the bill is passed, the administrator of the program, whether that's EPA or USDA or FERC or a combination, will then pick up the legislative framework and start, turning that into rules through a regulatory rulemaking procedure. That will likely take a couple years. In terms of market, in all likelihood, we already are seeing, to a certain degree, OTC trading on the offset side of things with the view that these offsets are pre-compliant. So that is, to a certain extent, occurring on a limited basis already, obviously without knowing the finalized regulatory framework. Once we have a bill passed, OTC trading likely will pick up. And then, again, if we hit this timeline, a view that the market is online sometime in 2012 or 2013. Then, as I said before, high-quality offset credits, particularly those that are issued through state or regional programs, have a high likelihood of making it into the system. I think, so sorry, my pointer skipped for a second. One of the interesting things that we feel in this bill that is a bit different from what we've seen internationally is that land-based carbon plays a really important role from an offset side. So basically the 15% of domestic greenhouse gas emissions in the U.S. that are not capped. That's really the sector that we can look to for domestic offsets, and really where we're looking, where most of the attention is being focused is on offsets that would come from land-based projects, the forest, agriculture, and soil carbon. Clearly, international forestry and ag are a big issue from a global perspective. It's already part of what is being proposed in California. And finally, from a political perspective, and we really saw this in Waxman-Markey, ag state interests, and the ag lobby are quite powerful. And is, you can make a very credible argument that without the support of ag states and the ag states and the ag lobby, Waxman-Markey would not have passed. And so all this is driving, all this relates back to the fact that land and energy that comes from land use decisions around land use is actually quite a significant part of the overall issue when you look at it from a global perspective. This is a graph also done by WRI that just shows a bit of a breakdown. Actually, this comes from the Stern Review, but using WRI data. And this is a breakdown on greenhouse gas emissions on a global basis. In terms of the role, the reason, again, why I think the U.S. is moving in this direction to place a large, to create a large role for land-based offsets is because simply solving the issue of greenhouse gas emissions from an emissions perspective, in all likelihood, does not get us to the actual goal of reducing greenhouse gas atmospheric concentration. So we need to increase the uptake of sinks, and what it means for forest and ag is that we need to reduce emissions from that sector. We also then need to increase the ability of land to serve as a sink and to take carbon dioxide out of the atmosphere. Some analysis has been done by McKinsey. I think this is a pretty familiar curve to a lot of folks. And what we've done is we just boxed, in red those project types that are related to ag and soil. And as you can see, there are quite a large number of them that are fairly low down on the cost of abatement curve. And in addition to that, interestingly enough, on the land-based side of things, land-based projects tend to be less capital intensive. And so therefore, we feel that a lot of the land-based projects are ones that, yes, they may take a long time. They're going to be long-lived projects. There definitely are issues that have to be addressed. But at the same time, they are projects that can have relatively manageable costs, low manageable cost of abatement. Not necessarily all of them that are cheap, but at the same time, they're lower on the cost of abatement curve. And in particular, they're not quite as capital intensive. I think in summary, just to summarize very quickly, we think that there are definitely similarities between the approach that the EU has taken and the US is taking. However, probably one big difference is the focus on incorporating a domestic offset market, with that domestic offset market primarily focused on land. Now, in terms of from an investment and a markets perspective, that doesn't change the bottom line analysis, which is that the actual cost of abatement at the project level is what will drive investment, and that will relate directly back to where where cap levels are set, and some of the other basic fundamentals of the market that